Welcome, guys. It's been an absolutely mental week. I know I keep on saying that every time, but this has actually been one of... I do not remember a week so bad, like so negative on the Nasdaq, on literally on every count. I mean, every single stock pretty much was getting hammered. Traders going absolutely nuts. We had crypto go completely upside down. Rajan.
Safe haven was the almighty US dollar. That's the only safe haven it seems.
Yeah.
I mean, we say it every week and go, wow, this has been a crazy week. And in a way, it's good that we can say this is a crazy week because there's stuff to talk about. But this literally was, like, if every week is a crazy week, this was the mother of the crazy weeks. It was, I mean, we just had so many different, I mean, we obviously had the Fed raise rates last week, and we had that fake out rally on the Thursday, and then we had the big down day on the Friday, and it continued out. And it just seemed like any type of rally that the market tried to do, it just couldn't hold it, and nothing ever felt secure. Like when the market went up, I'm just okay, you know, that's going down, and it just seemed to be the way the whole way. And so, firstly, you just saw destruction in so many of these stocks. You saw Apple finally giving it up; it actually went sub 140. You had Tesla went sub 700. You had so many of these names. Microsoft giving it up. Amazon almost went close to sub 2,000. Jeez. And I mean, the list just goes on, the amount of names that went. And, you know, one of my positions, Coinbase, you know, that's gone from like a 400 high to 150 to this week to a low of 42, settled at around 70. I mean, and it was really hard to comprehend. And that was just the stocks. Then now let's talk about the crypto. And obviously, you've seen from the last video, and obviously, unless you've been living under a rock, we all know what happened to Luna and the Terra ecosystem, the seventh or 7th or 8th biggest cryptocurrency project with a value of around $50 billion, literally vanished in the space of about a couple of days. And the stable coin, and we've seen a lot of stories. In fact, we have a couple of friends and their friends that are staking like $4 million on UST, all taking that juicy 20% yield. But I guess, like everyone sort of knew the risks and that this wasn't really backed by, you know, hard assets. But the thing is, I don't think people just thought it would unravel. And when it unravels, the speed at which it unraveled, I mean, you know, before you could even digest what's going on, because you could see, like, you know, the peg was starting to go, but in your mind, you're like, oh, this happened last year. You know, the UST peg went to about 85 and it went back up to a buck. You know, like, you know, it happened before, you know, I'm sure it'll come back. And then, you know, and before you actually I think no one in their right mind just thought, you know what, this is it, as it started to go. And so when Luna went from like 80 to 70 to 60 to 50 to 40 to 30, and I think, I don't know, 30 bucks, it might be quite good. And actually, the last pod I did, it was at around 17. I said, yeah, I'll take a little flyer on that. Yeah, I bought only a few amount, like $100 worth, nothing major. And then literally that $100 was worth 10 cents, like literally in a few hours. And then and then you're just like, wow, that happened quickly. And it's just, you know, the whole dynamics behind that protocol, just printing so much US Luna to try to peg up the UST, and it was mental. Like, apparently there was 6.5 trillion coins at one point on Luna, as it kept on, you know, just producing more Luna to try to support the UST price. But anyway, but it was just been emotionally quite distressing, to be honest with you. I mean, I've seen so many stories on Twitter about people that have lost their livelihoods. I mean, this is it's not a told you so, but it's, you know, being diversified is sometimes, you know, we could believe in something so much, but sometimes diversity does help with this type of, you know.
But the thing is, if you were diversified in tech stocks, you were getting hammered each way to Sunday.
See, that's diversified. Tech stocks is a space. Crypto is you know, I guess crypto you're getting done in whichever one you had.
The only asset class that was safe is real estate, to be honest. Like at the moment, there's nothing else.
At the moment, yeah. The thing is that it's weird because if you're diversified in like tech, the thing is that you're going to get smashed. But if one of those companies went bankrupt, let's say you had a Lehman moment, at least you haven't got all your stash in that one stock that basically lost it. You know, so it's been pretty wild. And the way I think about it, it's like, if you think about it and put it into perspective, this Luna, just talking about Luna, but forget just Luna. If you add Luna to the USD destruction, to the associated Terra coins like Astro, you had Lua, you had Mint DAO, you've got loads of coins that are tied to the Terra ecosystem, and pretty much all of those have been wiped out. I think if you add everything together, it's about $60 to $70 billion worth of wealth that has just been wiped out literally in a couple of days. I mean, that is bigger in terms of a market cap number than Lehman Brothers. when it went down in 2008, and let that sink in for a bit. But obviously Lehman had a lot, it's more of a bank systemic risk. You had a lot more institutions involved. You had a lot of client deposits, this and that. So obviously Lehman had his hands more, spread out within the whole ecosystem. But in this one is predominantly, although there was a lot of VC backers and stuff like that for this project, but predominantly retail just got done up the arse and took it massively lower. I mean, it took massive hits. And to be honest, is there going to be any contagion? I think in the next couple of weeks we'll find out. I mean, it's just wild.
This is the thing with crypto. We're in a situation where most people don't know the underpinnings of how things work. They just see a particular interest rate, or they're told by their friends to get into a specific coin, and obviously they buy it, but they don't know the fundamentals behind it. Now, when you contrast that to the traditional financial system, you still don't know how everything works behind the scenes, but at least you have some regulation behind it, that that there's people looking out for your back. Now, obviously crypto, everyone knows there's risks with it, but something like this is literally a black swan event. Like you were saying, Lehman Brothers, had a 46 billion market cap, and like Luna USDT had, I think it was something like 58 billion or something like that. It's just nuts how much value there was on these type of platforms, where they were so open in terms of what their strategy was on Twitter, just saying, we're going to be buying all these Bitcoin, etc. And unfortunately, that backfired on them, because some smart people knew how to leverage it and made away after fees with something along the lines with 850 billion or something like that. I mean, 850 million or something like that. Yeah,
about $1 billion. So this is the thing, right? I mean, there's people out there, they did a trade and they made $1 billion and took down 60 billion worth of wealth. So yeah, they made $1 billion, but what was the repercussions? But the thing is that someone saw an opportunity, and we see that with all of these hacks in the crypto projects, with 600 million stolen off a protocol, this stolen off a protocol. But someone saw a weakness in something, and they just went for it. And now, there's rumors that it's been, Blackstone or BlackRock and Citadel, but Citadel came out and denied this. The rumors saying that they were involved in this elaborate trade to, borrow. They borrowed UST, and they actually let them know that they wanted a whole bunch of UST, and then they sold Bitcoin. And then I don't exactly know the full dynamics of it, but it's all over the internet, like the trade that apparently happened, and they just basically gamed the whole system. But the thing about Lehman, you saw before Lehman, because I remember I was trading quite actively at that time, more as a future trader than like right now, more options. But when Lehman happened, you sort of saw Bear Stearns start it off. You actually saw it start to unravel, and it happened over a few weeks. The signs were all there that we're in a subprime crisis. And the thing is that unless you didn't want to believe it, the only thing that you knew that Lehman, you were hoping for Lehman, was that the government was going to bail them out. But you could see the stock price was just happening every day. But this, I mean, we just look at a chart, right? Actually, let's just look at the chart right now, right? I mean, this just happened like, hey, yeah, this is great, $80 a share. And then next thing you know, it's zero. It just happened literally just happened out of thin air. So, I mean, here you go. Last Friday, well, let's just say this weekend, it was $73. Saturday, the 7th of May. Last Friday, it was 76. And then, it was still trading around 60s, a little sell-off. But this was more related to the overall market, because we saw strong sell-offs in stock markets, and cryptos obviously now it was correlated to the overall risk-off sentiment. And then, literally what day was it? Oh, was it still Monday? Boy, it feels like, so Monday it started to go, and then here you go. It's now 0.000083668 circulating supply, 6.5 trillion Luna, which is just wild. And it's just the speed at which it happened is, just unbelievable. It's so hard to comprehend, how quickly it just unraveled. I think that is the more shocking bit, because you didn't really even have a time to react, to really sort of digest what was going on before it was too late, and it just went. And it was just crazy. I mean, there's loads of videos on it now. There's loads of dissection of what happened, but just it really does show that you have to, with crypto, you just gotta know deep down that anything can happen, and we've seen it here. This is not some scam coin. This is a top 10 coin, and it just unraveled like this. So you just got to play with what you can afford to lose. And a lot of people put their life savings in it, was so heavily vested in this one ecosystem. And, I don't blame them. Who would have ever thought this would have happened? But
crypto is supposed to also give power to the unbanked, right? So those people who weren't able to open a bank account, and USDT/Luna, people putting their salary and their hard-earned money. I don't even want to know the amount of people that have just lost it, and there's no recourse, there's nothing. I guess this will speed up the regulation, and that's obviously going to slow down innovation. As a specific friend of ours said, this is going to clear the decks and get rid of all the crap in the crypto ecosystem and let the true innovators survive.
Survival of the fittest. This is what it is, and this is how a free market is supposed to operate. If it's a weak project, a bad project, and there's vulnerabilities in it, then this is the outcome.
Yep, and if you've listened to the latest All In podcast, this is what they're saying in terms of the Fed putting in stimulus since 2008. We've had just unbalanced markets. The free market can't do its job when there's so much money floating around, and these valuations have just been stratospheric, and people were basing, especially anyone who got into the market relatively recently, they're basing all their investment decisions on multiples, which were just unattainable, really. Companies with revenues of less than $1 million being worth over $1 billion, like these type of absolute crazy ones. I think you were talking about it before in terms of costs and a few others.
Like all the meme stocks. All the meme stocks are just crazy.
But now we're in like you're saying, we're re-rating everything, and we're in a situation where having these companies re-rated is actually a good thing for the market, but unfortunately a lot of people have lost a lot of money, and unfortunately you're not going to be getting it back anytime soon, I don't think. Rajan, how are you feeling now? Today on Friday we've had a relatively bullish day. There's a bull run in a lot of these bear markets.
Generally,
right?
You get the sharpest bounces in bear markets. I don't think we're going to be out. The sort of telltale signs that we're sort of getting out of the bear market is when the volatility just decreases. Some of the ranges, like the Nasdaq range yesterday was about 500 odd points. We were down 300, up 100, down 400. And with that type of action, I was looking at the futures market, it's so thin. It's literally so little money can push around this market so much. I'm talking about the S&P 500, the Nasdaq, 10 million order can just drop it like 50 points or something. It's so illiquid relatively compared to when it is liquid. And it's just so whippy and thin. So the thing is that you're having these mad volatile days. And today, again, it's another 500-point Nasdaq day. And with this huge amount of volatility, and this is exactly what we had in COVID time as well, where we had the Dow down 1,000, we had some limit downs. And until the range starts to narrow, and when the range gets a bit less, the VIX goes down a bit. The whips are about like 100 in the Nasdaq, and it starts going down. As soon as that happens, you actually know we're actually getting near a bottom, because things are sort of settling down, and the liquidity is coming back to the market. So even though we had a good day, and I think psychologically, even though we've all taken big hits, on my crypto, on the stocks, just having a nice up day today just psychologically put me in the right frame of mind for the weekend. Just because if we had another terrible day today, it would have made the weekend feel, but at least it just psychologically in your head, I had a decent day today relatively, and only puts me back to where it was a couple of days ago. But just psychologically, you can go into a weekend with a bit of a better day. But this is all just.
It is stressful.
It's really stressful. Being in the States, I tell you what, I'm just trying to figure out who I can sue for this emotional distress, because you can just sue anyone here, right? So I need to sue someone for this emotional distress. It's just nuts. It's
this is the risk that you take when you're in the markets. These type of drops are just absolutely manic, especially if you are diversified. You're looking at like the sky is falling. It feels like that sometimes. You're just seeing everything drop every day. There's a 10% drop or even more if you're in any of these unprofitable growth stocks. It was just absolutely brutal market. And to be honest, it could all start again next week. We don't even know. But just having this one day makes everyone feel... It's so crazy how the narrative shifts in the markets. The whole week I was feeling so stressed, and today I'm like, actually, feeling okay, just like you. But yesterday I was so stressed out, even though there's nothing I can do, and I don't tend to make many trades or anything like that when the market's going down. I try to control my emotions, but I had to actually put my phone down on the table and just not look at it anymore, because I have these notifications when a certain stock dips a certain amount. So all I just kept on hearing is bing, 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 on my phone. Yeah, exactly. And a lot of people don't talk about the emotional side of seeing portfolios drop so much. If you do have any options positions on, just seeing them decay like crazy, or underwater like nuts, just you're like, what am I doing? Strategies that would have played fine for the whole of last year are just absolutely getting decimated right now. And then the market is super powerful. It's like it's like a great beach. You can go surfing on it and it's fine most of the year, and then one day you're going to just have these massive waves that are going to take out everything. That's how it kind of feels in the market. But one person who has been taking advantage of this, it seems, is Elon Musk, trying to renegotiate his Twitter buyout offer, which is prudent, I think. He's claiming that he wants to revisit the amount of fake accounts. I'm sure that Twitter haven't been completely honest with the amount of fake accounts. They're saying around 5% of their user base are bots, but it seems if you ever use Twitter, that it's a lot more than 5%. But I guess Elon's in his rights to try to renegotiate. It's like when you go and purchase a house, you agree a price, and once the home seller accepts your offer, you kind of go in and then you look at the roof, or you look at the boiler, or whatever else it is, and then you kind of try to get them down in price. So it's not totally unethical. But if Twitter was in the current market without Elon, what do you reckon it would be?
I've been reading a bit about this in terms of the contractual liabilities in terms of this deal. And there was a case before this. This was LVMH's deal for Tiffany's. That's the Louis Vuitton parent. And they offered to acquire Tiffany's, I think it was around 16.2 billion. And then they realized that they overpaid because the market corrected slightly. And then they're like, Tiffany's are not worth this much. So then Tiffany's took them to court and told LVMH, you're contractually bound. We've signed a contract. We've done this. And so they went back and forth. And eventually they negotiated a $400 million lower price. The LVMH did get it down, but it was only ended up being about 2.5%. So this Twitter deal, a lot of it will lie in the details of the contract signed between the two companies. So obviously now Elon is, I'm sure the amount of users was a metric in terms of the valuation. So by now questioning the amount of bots, it's sort of making him realize that, all right, it needs to be, it's not worth what it was in the market. And we've had a lot of people coming out saying that. Like my guess is that he wants to offer $420, $42. That would be about a 20% lower price. But I reckon Twitter in this market is probably worth about 22, 23. Yeah. So it'll still be about
especially if Elon's
premium and 100% premium. Yeah. But the real question is, how good are the lawyers? How much was it set in stone? The price, how many caveats were there to that price? Yeah. And I guess all of that is in the details, and that's what will really matter. And if Twitter doesn't negate on that, then
he's he's got 1 billion at risk, but I think that might be nothing in terms of the amount of savings he could potentially make if he was able to renegotiate. Thing is, Elon has has a lot of power right now, especially if there's no other alternate parties that would be willing to make a bid. In terms of Elon getting on board as well, there were a lot of investors that were setting up SPVs, special purpose vehicles, to be able to get into Elon's version of Twitter, hopefully trying to get the 2 to 3x in value over the next 3 to 5 years, Elon was saying in his prospectus. Yeah, like you were saying, Rajan, it's all up to the finer details that was in the contract, but for Elon to be publicly talking about the user base as a potential metric that could have been misadvertised, and if it was misadvertised, then he's perfectly within his rights to then renegotiate. But yeah, like you said, the devil's in the details. We'll see what it is. It's slightly different to the LV deal because I think probably all of their sales numbers and everything was pretty much transparent at that point, and just trying to look at market pricing, whilst this is something along the lines of a core business metric. So yeah, we'll see how that goes.
We'll see.
Like you said, I hope he gets it much cheaper. I hope Elon now he doesn't need to actually take out any margin loans because he's got the backing he needs. He might have over-representation of backing in terms of finance, so he doesn't need to even put down as much as he needed to. He possibly might have bought back some of the Tesla stock that he stole in the 900s, in the 700s.
All of his sales have been at great points. He's literally been at the high. The one thing about Elon, just remember, he's human as well. And to be honest, I can imagine him stressing out, even though the thing is that his net worth was at the high, like 320 billion, 330 billion or something. And then at one point, it probably went to around 200 billion. So basically a $44 billion deal now is a much greater portion of his net worth than it was literally, a few weeks ago. And, when you see your stock price go down, when you go see this, and then you just realize how over the top you're paying, I think all of these jitters come into your stomach, and you must have felt it a little bit. And then he's sort of getting, I don't know what he's thinking, to be honest with you, but he's up all night. I don't even know when he sleeps, because he's saying he's working the whole day, and then he's up all night. He's on Twitter. He's just doing this. He must be, I can't even imagine the stresses he's going through. So it must be wild, but I guess it's going to be a very interesting story over the next few weeks to see how this all pans out.
All the people that thought Twitter was an arbitrage bet up.
Risk arbs got done up the butt. Yeah.
All I have to say is the market knows, right? If you look at the pricing on there, it knows there are risks. Rajan and I have been burnt at these too good to be true type pricing, and you kind of always get done.
I don't think Twitter went much above $51 a share, which was it was almost 6-7% below the deal price. And so the markets, I don't think, ever really believed it, and then it went down to 48, 49. So you're a good 10% below the market. And I think the market pretty much knew this deal ain't set in stone yet, and clearly it was right. And on the initial tweet this morning, Twitter went and was down to like 34, 35, which is like $19 below the deal. And then Elon said, "I'm still committed to the deal," and it went back up to 40. And so it's still, it's 40.72 today. So we're $14 below the price. And what did I say? $42, 42.20 seems like an Elon type price. I think that's what the market thinks as well, judging by where it is.
But as a long-term Tesla bull and shareholder, I want him to get hold of Twitter, but I need his mind to be on. I guess, he's got Tesla in a place where it is doing pretty well, but in his recent interview with Financial Times, he's saying that an analogy is like Tesla's like a duck. You only see it floating above water, and you just see it gracefully moving along, but underwater you see it like paddling like crazy. And he's saying that is still what's going on in Tesla, to trying to, I'm guessing, navigate all these supply chain issues with the COVID shutdowns that still continue to plague China production. There's obviously a lot going on there, and so taking on Twitter means that he has to really take his mind off some of the main engineering tasks. We need to get to Mars. Obviously, he thinks this is a important enough endeavor that he needs to make. But I just wonder how well he's going to be able to defeat the bots. I'm sure
I've got a feeling that Elon now, it's more like a spokesman for his major companies, but it's all running itself. Like he's got the people doing everything.
That's not the case.
But that's what it feels like, because he has too much time on his hands. The amount he's on Twitter. He definitely gives off that impression. He gives off that impression. What he's doing, I know he's in board meetings. He's on the board of so many, all these sort of companies, trying to run those three and be on Twitter as much as he is, liking so many damn posts about so many things. Like it makes you think, when is he doing it? Unless he's multitasking,
I think he's doing it on the side,
and then he's just
He must be doing it on the bog. Like literally every time he's on Twitter, he's taking a number 2. So
He's doing a lot of number 2s in the day.
Let's talk about what have been your trades over the last week. How have you been finding the markets in terms of profits, or what?
To be honest, it's a tale of two things. That you've got your incumbent positions, and generally, given the market downturn we have, there's not that many short positions. I did close out a position in oil. Oil has just stayed in a nice range. I had an iron condor in oil, and that's worked out quite well. I did have I was short the XOP, and that sort of worked out decently, but generally most of my core stock holdings obviously got hit quite badly. But the thing is that, Coinbase was a tough one. I mean, that's a pure example of a stock that went from hero to zero in such a short amount of time. I mean, from the IPO, I actually know people that are still in from 350, 370. And I remember we went to 200, and literally just like Luna, a week ago, Coinbase was around, about 120, 130. And then yesterday we went to a low of $42, which was just insane. We literally went down $90 in the space of a week, and then it sort of bounced back, and now we're in the 70s. And the thing is, I did have a position in Coinbase before, which was underwater, but then I bought not a whole bunch, but like a little bit more at 48, and then it went up, and I just sold out today just to take the 60% on that. So that was a good trade, but that was a good trade among many bad positions. that's the thing. So I mean, if you got into some new positions in the last few days, then today would have given you a real nice profit. But the thing is, how many positions did you have before that? And so I think many people have been swing traders or day traders turned bag holders. That's what it seems, because we've had so many big declines. How many of them have actually sold out? It's very hard. The hardest thing to do is you have a plan, but then when you have these type of moves and you can't stick mechanically to that plan, you're just like, you know what, that's going to come back. It's already gone down 70%. But then what happens? It goes down another 70% from that 70% downturn. And then you're like, oh, well, it's so low now. What's the point of selling it? And then it goes down even more. And then you just end up being a bag holder. And that's generally the psychological aspect. So it's very difficult for a trade. If you have this mechanical plan, then the emotions all just take over and you just get swept in from this, you go, oh, this can't happen again. This can't keep on selling off. And I think the number one thing that we've learned, and we've learned it with Luna, and we learned it with everything, is that if something is down 90%, doesn't mean that it won't go down another 90%. You sort of think at 90%, but it goes down 90%, it could go down another 90% on top of that 90%. So that's something that definitely is something that but you haven't really had to put into practice for such a long time, because the Fed has been literally peddling this, supporting this, the Fed has been the put option. And now the Fed has taken away that put option. You're on your own. And you can obviously see what can happen. So we've had this bounce. It's made us psychologically feel a bit better going into the weekend. But next week now, who knows?
Yeah, what do you think? I think that we still got a bit of way to go. I think the Fed are, they're the ones that caused this problem, this massive asset bubble, and now they're trying to reverse it. And also in the All In podcast, they're talking about they haven't even started their.
They haven't started.
Obviously they purchased all these assets, and now they're going to have to deleverage on all of those and get back the apparently 3 trillion or so that they've printed. And just imagine what's the trajectory of that. Usually when we're in recessions, we can potentially lower rates to try to fight that recession and try to get back on track. But we're in a unique position where we're in a recession and we've got low rates. So what financial levers can they use? They've obviously done all the QE.
Recession, low rates, and high inflation. And this, and obviously we had the inflation number on Thursday, which was the catalyst for that big downturn we had on Thursday. Yeah. It did come in ahead of consensus. And the thing is, the thing about that report is that the core inflation, when you X out energy, was also 0.2 above consensus. So that's why we saw.
There's a part of that that's due to airline fares.
But it's still the waiting.
Yeah,
you can always dissect it. You can dissect every little bit.
But just to know where a lot of that came in was airline fares.
Yeah.
Even though that only has a 0.5% ish or 0.4, 0.5% weighting on the actual CPI number, the airline fares were up over 20%, and that's month on month. And obviously there is a big demand aspect of that, but also in terms of energy prices being much more expensive, like doubling the freight prices or adding quite a bit on. But I'm just saying, like these small things that you don't think have much of a big weighting kind of can just switch everything, because literally that 0.2% sent the markets like crazy. You know what I'm trying to say? It's like,
I think what it was, what happened with that day is that there was murmurings that we're going to come in slightly lower. There was this whole, so
there was
before that number,
rally, wasn't there?
Yeah. So the Nasdaq was up like almost 200 points, and I think the market had set up that we're going to be, the expectation was about 8.1 for the headline year on year, and the whisper number was around 7.9. And then what happened? We came 4/10 higher than that. So what it was, the market was positioned for the 7.9 number, and it came in 8.3. And it just blindsided the market. And we literally, I've never seen the Nasdaq go down so fast. It literally, liquidity just drained, and bam, it literally dropped 150 points in 0.1 seconds. It was just so fast. Like every bot was on that. And the thing is, there's always ways to explain away different numbers, because every month it's a high number, and the government's going to try to explain it away. And there is legitimate reasons why certain numbers are high. But again, now that the comparisons are going to become a bit more easier over the next few months. And so let's just see if they can get it down. But China's still locking down like crazy. So, that's not helping the supply chain, but I think in this sort of time, we can always say, no one really knows what's going to happen next week, but you can always bring out the trusted chart to just sort of paint the picture of what's happened. And then, so this is the same chart that I've been going back to over the last however many months. And then we can just see here, right? So this was where, this was the March high when we did rally. I think we were going initially here. And I think we spoke about this earlier. And I did say that if we break this upper trend line, then we would have a little rally. But we went up. And in fact, the move from here to here is more or less the same move from here to here. So you can see the symmetry. And then we just started to drift down lower again, tested that bottom trend line that we had going back to January, February high, and then the breakout. And we sort of actually bounced off there quite a few times. So it actually ended up being a good support area. And you can see we had one bounce here, another bounce. We had a pin bar bounce, and now we've broken below it. And so we have now we've actually hit 3 lower lows. So this was Thursday low, and can you see each one was like a wick, like it's like a pin bar. And so we had like a really long wick on all 3 of them, 1, 2, 3. And so we bounced again. And I think, again, so where we're going to go next week, this level will be crucial. But we are trading towards the upper end of that prior lower bound range. So this is what we're looking out for, this red line over here, which is sort of the midpoint of the overall larger range. So that's what I'm looking out for right here. So if we try to just pictorialize it, this is where we are for the S&P. We can see how big these bars are. Look at these. These are huge candles, and they actually represent like 150 points range. And just look how many of them there are. I mean, you've got a big one here, another one, another one. I mean, there's been so many massive days. So I can only just see this continuing on next week. But I mean, this is what we're looking at. We're in an overall downtrend. And I think the trend will change when we actually take out this trend line on the upper end. So if we go above like 4,200, then I think we can snap out of this downward trend, this overall downward trend, and we might start seeing maybe a bullish thing. But until then, I think we just have to assume that you've got to start to sell the rallies. So that is basically what the charts are saying as far as I see it. So that is my take for the next few weeks.
Yeah, I'm still long, but I'll be careful, going after stocks at this moment. We are in a bear market rally, I guess, today, especially when long treasury yields are continuing to rise. In terms of Nasdaq, what's your predictions? I'm saying, it could potentially go down to the mid 10,000s, down.
Yeah,
like
I saw.
Like that, maybe. What do you reckon?
I think, there's a Twitter guy. I'm sure some people, Puro Saxena. He actually put out something that if the multiples go back to, I think it was, I don't know which multiple, which year it was. Was it the 09 multiple or the 010 multiple, or like the pre-COVID multiple, whichever the comparison multiple was. The Nasdaq will go to the S&P will go to around 3,300, 3,400 for it to be in the same multiple as it was either prior to the pandemic or the prior recession low. I have to look back at that tweet actually. And then the Nasdaq is around 10,000, and then that's when the forward PE will be around 18 on the Nasdaq, 15 on the S&P, and I think those were the two numbers. So
Puru was saying that we're in a relief rally, likely before the final leg down to the low. Like you were saying, he's saying a counter trend rally to retrace to the 3,500 point decline in the Nasdaq might be starting, and if it materializes, we may bounce to 13,000 to 13,400 before the another leg down. So What are you saying? Do you believe Burrow? I think obviously he's had many correct predictions in terms of even this particular correction. I remember he went on to Davies.
So I've got this.
Yep.
I've got this tweet just clarifying it.
Yep.
It was the current forward PE is now declined to 16.7, and in the prior bear markets in 02, 15, 16, 18, and 20, ended the SPX forward PE compressed to 14, 15. So if that is what it goes to, the S&P at 15 times will be around 3,500 and 14 times will be 3,300. So this is if the forward PE goes to the prior bear market PEs. So it's a good stat to know just as a point of reference. And if we do get to those PEs, then what does that suggest? It's a screaming buy then. We've got to the prior bear market PEs. I don't know whether it's going to get there or not. Right now, I think the consumer's still pretty... there's a lot of people buying, airline fares are up because there's so much demand. A lot of people still got money. So I don't know. Even though it's a recession, it doesn't feel like a recession over here. I see everywhere just packed. I see all the restaurants packed, people everywhere, people are all over the road. So although the numbers might suggest a recession, it doesn't feel like a recession at the moment. Yeah. So
remember, we're only one quarter in terms of numbers, right? We still need to get the second print for Q2 in terms of the negative GDP. But we'll see how that goes. We're obviously ahead of the curve when looking at the markets. You're way ahead of the curve because obviously markets are a prediction machine. We'll start seeing the ramifications of everything probably further down the line. I think it'll really start taking a hit if the property prices start to fall. And yeah, you'll see a lot of people kind of paying more attention. It seems like there's a lot more supply in the market now, especially even in London. A lot of people are now fearing the real estate declines, and with rates going up, there were many buyers who already locked in mortgage rates earlier on, and they're all in the process of completing their transactions. But now going forward with much higher rates, I think you refinance in the mid twos, right? And now I think
mid to higher twos, but now it's about 4. It's getting towards a 5% mark, 5.2, 5.3. So it's literally, I think I mentioned this last time that the average price in the US was around 400 and something thousand in January 2021, and now the median price is roughly 520,000, and the interest rate has gone from about 3 to 5. So the average mortgage payment has gone from 1,100 on the average house to 2,100 or 2,200. So the average mortgage is literally double on the average house than it was 1 year ago. So that tells you what you need to know. So that about wraps it up for today. It's been a wild week. It's been very difficult for some, and I've seen on a lot of these forums and how the crypto community is trying to come together and say you're not alone. Talk to people. We're in this together and stuff like that. There's reports of some suicides and that, and it's a very sad thing to see all of these sort of reports that going out. But just it's easy to say, but it's only money, and life is more. Life is more than just money. So as easy as it is to say,
the health of your loved ones and your relationships are the most important thing. Again, this is only money. I know, obviously, we put a lot of blood, sweat, and tears into making that money. But again, there's a saying that this too shall pass. So if you are feeling down about this particular downtrend, know that if you keep your conviction in, hopefully, you haven't locked in any losses. If you have, you'll be able to make it back. It's just a question of time. But again, don't think that by having a gambling mindset that, look, okay, I need to get back all of these losses. That's not the way that the market won't reward you. The market
owes you nothing. Market owes you nothing. Yeah, just remember that.
Just have a go back to the drawing board and devise another strategy that you think will create another model of what you think the future is going to look like, and invest based on that. Once you've saved up a bit more, and you just get better and better at it as time goes by. But just know that these type of events can and do happen. It's happened to Rajan multiple times over his career. He's lost huge amounts of money through no fault of his own. It's just, this is the market for you. It's like it's unpredictable. So
well, please like and subscribe if you liked what you heard, and we'll catch you on the next one.